Welcome back. Well, right there, you see the governor is seated at this time with the MPC committee. And definitely, we know it's, we're all waiting. We've all been waiting for this moment. The first one for 2024, the 293rd meeting. And yeah, we've been discussing the issues before this MPC at this point. And we're seeing high inflation rates, currency weakness, and unemployment, among other issues that we have to deal with at this time. And I know that the central bank governor is going to be letting us know what went into this decision. And as Mr. Kalu did say, we're going to know who the hawks are and who the doves are, right after we get the decision at this meeting. But we see right there, everybody's seated at this point, and very soon we're going to be getting a briefing by the CBN governor, Mr. Yemi Cardoso. So the moment is here. It's almost like a match between Nigeria and Brazil or something at this point. But how are you seeing the body language of a CBN governor this time? Yeah.
They have a name for him on Twitter. I'm not sure I can say it on air.
Yeah, that name.
Yeah, I don't like that name.
But no, I think we have confirmation. The governor is addressing right now. Take a listen.
Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its first meeting of the year on the 26th and 27th of February, 2024, to decide on the appropriate course of monetary policy going forward. All 12 members of the committee attended the meeting. Decisions of the MPC. The committee decided to further tighten monetary policy as follows. 1, raise the MPR by 400 basis points to 22.75 from 18.75%. Adjust the asymmetric corridor around the MPR to plus 100 to minus 700 from plus 100 to minus 300 basis points. Raise the cash reserve ratio from 32.5% to 45%. Retain the liquidity ratio at 30%. Considerations. The committee's decisions were centered on the current inflationary and exchange rate pressures, projected inflation, and rising inflation expectations. Members were concerned about the persistent rise in the level of inflation and emphasized the committee's commitment to reverse the trend as the balance of risk leaned towards rising inflation. The committee, however, acknowledged the trade-off between the pursuit of output growth and taming inflation, but was convinced that an enduring output expansion is possible only in an environment of low and stable inflation. Members noted the decision to transit to an inflation targeting framework as essential to addressing the persistence of inflationary pressures in the economy and commended the fiscal authority for their invaluable support. In the opinion of the committee, the options available for decision was to either hold or hike the policy rate to offset the persistent inflationary pressures. Considering the option of a hold policy, the evidence revealed that previous policy rate hikes have slowed the rise in inflationary pressure, but not to a desirable extent. Members considered various scenarios of hold and hike and concluded that inflation could become more persistent in the medium term and thus pose more regulatory challenges, if not effectively anchored. The balance of the argument thus leaned convincingly in favor of a significant policy rate hike to drive down inflation substantially. The MPC also deliberated extensively on various distortions in the foreign exchange market, including the activities of speculators, putting upward pressure on the exchange rate with high pass-through to inflation. Members were, however, convinced that the ongoing reforms in the foreign exchange market will yield the desired outcome in the short to medium term. Some of these reforms include the unification of the foreign exchange market, promotion of a willing buyer and willing seller market, removal of all limits on margins for IMTO remittances, introduction of a two-way quote system, and the broad reforms in the BDC segment of the market to restore stability, enhance transparency, boost supply, and promote price discovery in the Nigeria Autonomous Foreign Exchange Market, NAFEM. The committee reviewed the key financial indicators of the banking system and noted that the system remained stable. To further ensure the stability of the banking system, the MPC called on the bank to increase system buffers by recapitalizing the banks to improve resilience against potential risks. Members further enjoined the bank to strengthen surveillance and compliance regarding its earlier guidance on the application of foreign exchange revaluation gains. The committee identified non-monetary factors driving inflation, such as the persisting insecurity and infrastructural deficits, and noted the role of fiscal policy in addressing these shortfalls, while reiterating the commitment of monetary policy support. In this regard, the committee applauded fiscal policy initiatives towards reducing the cost of living for ordinary Nigerians, including the ongoing efforts to improve food supply and provide mass transit CNG buses to ease the cost of transportation, and the civil service reforms to improve the efficiency of government, amongst others. Key developments in the domestic and global economies. Headline inflation year on year rose to 29.90% in January 2024 from 28.92% in December 2023. Food inflation increased to 35.41% from 33.93%, while core inflation rose to 23.59% from 23.07%. The major factors driving inflationary pressure remain exchange rate pass-through, rising cost of energy, high fiscal deficits, and lingering security challenges in major food-producing areas. In addition, global factors such as tight financial conditions and trade disruptions from ongoing geopolitical tensions remain significant upside risks to the outlook for domestic inflation. Staff forecasts, therefore, indicate that inflation will remain on an upward trajectory in the near term before commencing a descent. Real GDP growth improved in fourth quarter 2023 to 3.46% compared with 2.54% in the previous quarter, driven by improvements in both the oil and non-oil sectors. The recent improvement in the oil sector was due to the combined impact of increase in crude oil production and a relatively high price in fourth quarter 2023. Forecasts indicate that the economy will grow in 2024 by 3.38%, CBN estimate, and 3.88% Federal Government of Nigeria estimate, and 3% the IMF estimate. Gross external reserves stood at $34.51 billion on February 20, 2024, compared with $32.23 billion at end of January 2024. The improvement was driven by reforms in the foreign exchange market and an increase in oil production, amongst others. In the global economy, inflation is projected to continue to moderate in 2024, but could remain above the long-term objectives of several advanced economy central banks. Consequently, policy rates amongst this group of central banks are expected to remain high in the short to medium term. The committee thus recognized the need to continue to put in place measures to boost investor confidence and to attract capital inflows. To this end, the committee will continue to monitor developments in the global and domestic economies to ensure that inflationary and exchange rate pressures moderate in the near term. The next meeting of the MPC will be held on the 25th and 26th of March 2024. Thank you for listening.
That was communique number 150 from the Monetary Policy Committee meeting, presented by the chairman of the MPC and governor of the Central Bank of Nigeria, Mr. Yemi Cardoso. We'll now take questions from members of the press. Please state your name, your medium, and then ask your question. Thank you.
Good afternoon, CBN Governor. Good afternoon, everybody. My name is Sarah Chimogo. We've witnessed a rising rate of inflation, and you stated it in your speech. Would like to know what the bank will be doing to, reduce that for the sake of Nigerians out there. Thank you.
Thank you very much. Firstly, I hope you can see from the decision that has been announced with respect to our policy stance and the monetary policy rate, that clearly we are out to tighten money supply and to ensure that we have a robust structure in place as far as monetary tools are concerned to rein in inflation. Obviously, we expect that this would show effects will moderate in the short to medium term. But increasingly, we also appreciate the fact that there's a structural side to inflation, which we intend to work very, very closely with other arms of government, in particular with the fiscal side. Because in my address, I had mentioned issues of insecurity. Very important that we're able to manage the insecurity challenges and that agricultural productivity is also improved. And of course, the issues of the oil and gas challenges. So our hope is to collaborate very strongly with the fiscal side so that the other elements of inflation that are not directly within our control will be able to be managed a lot better, and a more positive outcome will come to the benefit of all Nigerians.
Thank you very much, Mr. Governor. My name is Sunday Michael Ogu. I write for Daily Trust newspaper. My question would be to some other events outside here. In some of your recent engagement, you've talked about infractions in the forex market, and there had also been reports of how some of the commercial banks have aided some of these infractions. I would like to get a sense of what you would do differently to this commercial bank to rein in on some of the unwholesome practices we have seen on that corridor. Thank you.
Well, first of all, let me say that I think it is very important, as in general, that we have a market that has a good amount of liquidity and where distortions are minimized. And by that, I mean create an environment where people can come in, people can go out as they please, and where distortions that are present are taken out so that the market functions a lot better and also is a lot more transparent. In a market like that, you find that the ability, and of course, is policed or maybe regulated by us. Let me not say police, regulated by us. And in an environment like that, you find that the opportunity for players to game the system in any way is significantly reduced. So I think it is very important that we should come to a situation where that happens in our market, where the market is able to attract liquidity and can function properly. And you see that in recent past, we have been able to, at least through certain monetary tools, begin to attract liquidity into the system. For example, you may be aware that more recently, we attracted, and it was quoted quite widely in the press, over a short period of time, we attracted up to $2 billion as a result of the tools that we had used to calibrate interest rates, etc., and to make the market move towards greater transparency. So I think that is something that we all should expect to see as improving as time goes along. So that is that. I thought it was important to say that as background and context before I answer the question that you have just raised with respect to infractions. What we are doing at the moment is a collaboration between the central bank and the law enforcement agencies, okay, to ensure that we can understand better what is going on in the market and where infractions are taking place, they be speedily dealt with. Now, I must say that we are moving, as far as the central bank is concerned, we are moving to a very aggressive regulatory environment. We are moving to a very aggressive regulatory environment where those policies have been coming out, as you can see, and tolerance for people not to abide by the regulations that are coming out and to comply is zero. People will have to abide by those regulations, and those that do not will face the consequences for not doing so. As we look to what has happened in the past, I can assure you that a very thorough exercise is going on to identify what needs to be done. And once we come out with the outcome of those, it's not something that we will keep to ourselves. We will advise you accordingly, and we will do what we have to do. In the meantime, as I said, we are going to continue to make the market more liquid and to ensure that those who are genuine and really want to abide by the rules and regulations that have been set by the central bank will be free to do so. Those who do not should be ready to face the consequences. I won't say more than that at this stage in the game.
Good afternoon, sir. My name is James. Sir, when does the CBN hope to clear the outstanding 2.2 billion FX commitments? And if you would kindly update us on the bank's FX results. Thank you, sir.
In terms of the backlog, we are committed to clearing the backlog of identified and genuine requests that are pending. Okay, genuine requests that are forward requests that are pending. We are committed to doing that. And I can tell you that just today, we paid out another $0.4 billion to those that were so identified. We paid out $400 million US dollars that have to those that have been so identified. And we are committed to continue to do so in one form or the other to those that are genuinely identified and proven cases. It is not in our interest to hold back on paying to those who have been so identified. In terms of the reserves you spoke about, it was in my speech today that it has gone up over the recent past to 34 billion US dollars.
Good afternoon, Governor, DGs and members of the MPC. I am Nancy Naji. I want to ask a question concerning Binance. And let me put it this way, that reports have been heightened recently concerning scrutiny on Binance and other cryptocurrency platforms. Given the collaboration you have with SEC, and it's instructive to also say that I can see SEC DG here is a member of the MPC now. So I would like to know the collaborative measures between the CBN and SEC to avoid currency manipulation in the foreign exchange market, but while also nurturing innovation in that space. Thank you, Governor.
Thank you. Thank you very much, Nancy. It's a good question. And a couple of things I have to say on this. Number one, we have a responsibility to protect Nigerians. We have a responsibility to protect Nigerians. And it is with that responsibility in view that you have the central bank collaborating with other agencies of government. The collaboration with SEC is not just by virtue of the fact that the Director General of the Stock Exchange is a member of the MPC, but also the fact that they have a very important role to play with respect to the way protecting the interests of numerous investors. They have a very major role to play there. And in that regard, I am pleased to note that the collaboration we've had has been able to identify some of our fears, really, and to confirm, well, maybe not happy, but I can say that we have been able to confirm some of our fears. We are concerned that certain practices go on that indicate illicit flows going through a number of these entities, and suspicious flows at best. In the case of Binance, in the last 1 year alone, 26 billion US dollars has passed through Binance Nigeria from sources and users who we cannot adequately identify. There's a lot that is going on now as a result of collaboration between the different agencies, which includes EFCC and the police, and of course the office of the NSA. And in due course, as we progress and have more information to share, we will certainly share. But suffice to say that we are determined to do everything it takes to ensure that we take charge of our market, or put it differently, do not allow others to manipulate our markets in a way that ends up distortionary and suboptimizes for all Nigerians. We will not accept it, and we will do everything possible to prevent any of these kinds of infractions from taking place.
Good afternoon, Mr. Governor. My name is Nduka Chejin of the Nation newspaper. Last Friday, the CBN released draft regulatory and supervisory guidelines for bureau de change. Can you please tell us, or rather give us an overview of what this guideline tends to achieve when it is done? Thank you very much.
Well, firstly, I must say that in the interests of greater collaboration, the guidelines you refer to are up on our website, and it's like an exposure draft. It's not by any means final. It's an exposure draft whereby we want as many people, as many stakeholders as possible to go there and see what is on offer and see where we are going to, and where you have questions or observations, we're very willing to accept them, fit them into the road of travel. What we are hoping to accomplish by this, frankly, is to bring some sanity to an industry that I am sure you will all agree with me has really gone out in a limb and arguably does no longer serve the interests of those who it was meant to protect or reach out to. Too many people had gone into that sector, and really, as at last count, I believe we had over 5,000 bureau de change going on to 6,000, which definitely had different interests depending on you know, where they saw themselves. And don't forget that at some point in time, the bureau de change was used strictly with the intention by many who applied for these licenses to take advantage of the different windows in the foreign exchange market and in the process arbitrage the system on an ongoing basis. Now, we are hoping that by the time this exercise is finished, by the time the guidelines come up, we've proposed that for certain categories of BDCs, which are the categories in a particular location, the share capital, minimum share capital, will be £500 million. And for those who choose to work throughout the country, their share capital is proposed at ₦2 billion. We are also putting strict regulations as to who should be a potential owner of a BDC. In other words, we don't expect it to be an all-comers affair. We expect it to be those who are serious and who genuinely want to provide services to Nigerians, not for themselves, but for all Nigerians. We expect the genuine ones will come out and apply. And of course, we expect to use technology. We expect to use technology for their operations. And as I had said earlier, the whole concept of surveillance and monitoring is going to be something that the central bank is going to incredibly strengthen to ensure that we're on top of those who decide that that is an area they want to face. And as I said, that facing is not for individuals or for certain groups or anything like that. We hope we'll be able to increase competition from those who are genuine and those who have wherewithal, and competition eventually should drive down prices, and Nigerians should benefit from it.
Honorable Governor, my name is Ima Uja. I work for Vanguard. There have been a series of circulars on the reform you are carrying out in the FX in recent weeks. Could you give us an overview of what you thought you have achieved in terms of the stability of the market? Thank you.
Thank you. Thank you very much. A good question. And I want to assure you, first and foremost, that these circulars were circulars that a lot of thought went into. They were not knee-jerk reaction circulars. These are circulars, the content of which had been thought of months ago, and the debates had been taking place regularly. In fact, the input for some of those circulars came as a result of certain committees, a number of different committees, many which met as early as 8 o'clock in the morning and went on for hours debating and then putting forward proffering solutions, testing certain assumptions, bringing them back, going back again to discuss and debate again, sleeping over it, looking at what had happened in other countries and the consequences of applying certain measures. Where there had been wins, where there had been losses, we took cognizance of those losses. And we bore in mind the peculiarities of our own particular situation before concluding on certain things. So a lot of effort had gone into those, and we started to roll them out as we saw the market developing. You may recall that one of the earlier ones, and a number came out at the same time, but one of the earlier ones had got to do with the open position, the net open position of the banks, and making it very clear what you could and what you could not do, so that there would be no ambiguity in how banks carried out their operations in future. And with that goes regulation. And I can assure you, with that, we had different layers of regulation going to test and to look at the books of the banks and to see where there were infractions and where people were not complying, and ensuring that the circulars were very well understood. So a number of them have come out in that spirit. And quite frankly, the hope is that with greater understanding and with very clear communication, we'll find a situation where the distortions will begin to narrow and hopefully eliminate. I would be the first one to admit that lack of clarity sometimes can lead to distortion. And that is why we feel it is so necessary to put these things down in writing. And for example, where as we move along, where we may not have even anticipated certain things, and listening to the stakeholders, we come up with a circular that addresses particular problems. I know that recently we came out to try and bring greater comfort with the rate that is used for Form Ms and for customs. We had to do that in recognition of what we saw were potential, I won't necessarily call them distortions, but were making life uncomfortable for those who were using these particular products. So it's important that we as a central bank should listen, and where we see there's need for us to adjust, we adjust appropriately. But long and short of it is, I think, with the flurry of different different circulars that have come out, it has helped to douse the possible unintended consequences of other actions.
Good afternoon, Governor. Good afternoon, Mr. Governor. My name is Yemi Cardoso for Business Day newspaper. Governor, you
seem to have this very strong opinion that the naira is currently undervalued. I mean, you've made that statement recently. So, what do you think, is the fair value of the naira, and how soon do you think, we'll get there? One. Then, secondly, please, if you allow me, you've also consistently spoken about the new CBN direction, around, stepping down some of its agricultural interventions. So, considering the amount of sums of money that have been injected into that sector already, how does the CBN intend to recoup, to ensure that these loans are repaid, and then how do we progress, from here?
Thank you very much. Two good questions. One, that I've said that the naira is undervalued, and maybe some would think that that was a rather bold statement to make from a central bank governor. Look, and really from my perspective, there's a technical side, and I won't say too much on that. There's a technical side. And the central bank, obviously, on a continuous basis, does its own internal calculations. And then there's the softer side. Now, as far as I can see, the softer side is one that results in some of the things that I had mentioned earlier. Okay, and that is distortion. Now, to the extent that a market is not functioning effectively and is distortionary in outcome, then my view is that it certainly cannot be what it is. And that is why I said that for me, it was a challenge to ensure that we remove those distortions. And some of the distortions we are seeing, we spoke about earlier, has been raised here, is some of the manipulation that has been taking place. That is a distortion. It's a huge distortion. And we can go on and on some of those matters, and some we are investigating right now as I speak, so I will not be able to say too much on it, unfortunately. But as and when we come up with these distortions, we will take them off and throw them away, and where there are distortions that that come about as a result of bad behavior, we will ensure that those who do it will face the music as a deterrent to ensure that others in future do not go that route. They do not, because that's very important. They take the road of travel to a place where it has no business being there, and completely confuse the market. Let me put it that way. So that is that. Then on the issue of intervention is what I think you're referring to, interventions, and the fact that the central bank has said that it is moving away from that. And I want to reiterate it. The central bank is moving away from that. It is. And quite frankly, the reason shouldn't be so far-fetched. Here we are talking, everybody concerned about inflation. Everybody is concerned about price stability. If we know that that is the concern of everybody, and if we know that it is affecting everyone, everybody is being heavily affected by this, then why won't we say that we will put everything we have to ensure that we fight that monster? Why won't we do that? The intervention has two dysfunctions as far as I am concerned from the central bank's space. One is that it takes away a lot of your time for something that really and truly you do not have the expertise to do. And two, it also, if not carefully handled, creates a lot of distortions in your economy through inflow of money supply. through inflow of money supply. The interventions that took place in the recent past were estimated in excess of 10 trillion naira. I'm not talking about ways and means. I'm talking about the interventions that you just asked about. Over 10 trillion naira. What was the budget of the federal government of Nigeria? What was the budget of the largest state in Nigeria? Do the math, and it will tell you the extent of damage. Too much of what may appear to be good things, can do to an economy. So, for me, it's a major issue. A number of things will be naive to say that in saying we're not going to get directly involved in interventions. Those that are out there, they need to be properly monitored to ensure they come back in. That's one. What has gone out, we have to ensure that we monitor them to ensure that they come back in. And we're doing so. We're already doing that. And with various degrees of success, at some point in time, in the interest of transparency, those figures will be made public. So that has to happen. In addition to that, one is also a believer that for those who have the capacity to handle these kinds of, in the relative kinds of interventions, then we can partner with them. But the time where we can have failed interventions in Nigeria is over. There's no more wiggle room to take on interventions that have a great potential to fail and do not get down to the people who they were intended to get down to in the first place. I hope that is clear.
Thank you so much, sir. I just received a question from Lagos, from Bukola Lambo of Leadership Newspapers. Sir, permit me to ask the question on his behalf. He said, Nigerians expect so much from the Central Bank of Nigeria and indeed the federal government. What is your message to the average Nigerian who believes that the CBN is responsible for all their current economic challenges? Thank you.
Oh dear. I laugh at that question, but it's not a laughing matter. It's not a laughing matter. And I think it is very important for Nigerians to understand that the central bank governor, I and my team, are not responsible for the woes that we have today. We are part of the solution. We are determined to ensure that we work hard to get out of the mess that Nigeria is in. We assumed responsibility in a time of crisis of confidence. There was a crisis of confidence. And you may all want to go to bed and wish that that crisis of confidence was not there, but it was. And we can't turn back the clock. All we can do is do the difficult things to make a bad situation better. And I do believe that the efforts that we are making are beginning to bring back confidence. Because to be frank, without confidence in our business, you are not going to get very far. No matter how much you believe you have in your store of dollars and cents, naira and kobo, no matter how much you think you have, if the confidence is not there, all that money will disappear in no time. So, we are working hard. We are putting out our policies. We're trying to avoid as much as possible not to go against the grain and the spirit of what we've said we would do. We're trying to be as open and transparent as possible. We're bearing the interests of all Nigerians in view with any decisions we are taking. We are ensuring that we put the country above individuals. Because, like I said before, and it also applies to this, Nigeria does not have the wiggle room to make failed interventions. Similarly, we do not have the wiggle room to get it wrong. We don't. We are not magicians. We can't wave a wand and it'll all be good. If we make mistakes, we'll be humble enough to say we've made a mistake and we will change course. But we will do everything possible to conduct our business, recognizing that we are in a position of trust. We are in a position of trust and will not betray that trust. I would also say, I'm not on the fiscal side, and we're very fortunate that in the process of having the MPC, we have very senior level fiscal representation. And that hopefully should also help the handshake as we go along, because you spoke about CBN and FGN. So I will take the liberty to say something about FGN. And that is that really from the perspective of the central bank, again, we're not the federal government of Nigeria, but we see hard decisions have been taken and they are required to help us because the central bank can't do it on its own. It has to work very closely with the fiscal side. One without the other is like, that famous adage of clapping with one hand. It won't go anywhere. So the two have got to work very closely together. And we see a lot of the reforms that are being taken on the fiscal side, and are helping to create a better environment, for Nigeria. Having said all that, I think it's also important that Nigerians must also understand certain things that are basic so that, it's necessary to be able to see where the future is going. A tax to GDP ratio of 7.1, quite frankly, is one of the lowest in the whole world. It's one of the lowest. In fact, the recommendation for proper sustainable development is in the region of 30 upwards. Now, you can ask, how did we get to 7.1? Why is it 7.1 when it should be multiples of that? That is a discussion for an entirely different day, but that is what it is. So anybody having the expectations that it's all going to be turned around overnight from the fiscal side is not likely to, it's not going to happen. But what is likely to happen is that 7-to-1 will continue to grow in an upward trajectory that will be to the benefit of Nigerians, and then get to that level where there's comfort all round. In the meantime, of course, it is for Nigerians to monitor these things, and also, from every indication, the federal government is putting in place certain palliatives that will help the difficult times that Nigerians are going through until we get to a situation where some of these things begin to improve. I thought it was important to say this, that the commitment is there, certainly from the central bank, and from what I can see, the federal government of Nigeria. The commitment is there. The difficult decisions have been taken. We're now at the stage where we're trying to rebuild and rebuild better, and rebuild in a way that those who now come will see that they have something on the ground that is sustainable. No point in building something that will crash after a number of years. That's not the idea. The idea is to put something down in place that will be able to outsurvive all of us.
Thank you so much, Mr. Governor. With that...